and welcome. You're watching Closing Trades on ET Now, and it's turning out to be a wobbly Wednesday for the Indian markets. Yes, it's a truncated week, so we have expiry a day ahead of usual on Wednesday itself, and there is that added volatility as well. Nifty has slipped almost 200 points off the highest point of the trading session, but the good news is that the fall has been arrested and we are 80 points off the lowest point of the trading session, but still the largest cut that we have seen in the last 1 month. Bank Nifty is the key underperformer today. 2 percentage point cut as far as Bank Nifty is concerned, and this is despite the 300-point reversal that we have seen from the lowest point of the trading session, and all the constituents of Bank Nifty are trading in the red, whether it's the private banking space or the public sector banks. They're both reeling under tremendous pressure. In fact, HDFC Twins as well as ICICI and Reliance, they're contributing as much as 125 points on the Nifty on the downside. So large caps are clearly the pain point today, and India VIX has of course spiked 8% on account of the monthly options expiry. And that tells you the kind of volatility that we are seeing. Having said that, we're in thick of earnings season, so let's take a look at the good earnings that we have seen or the reactions coming in. TVS Motors is of course excited on the fact that they said Q4 is going to be better than Q3 when it comes to international markets. Margin pressure is easing, and that's a bit of positive. Home First Finance gave us positive commentary this morning, and that's why that stock is up around 6%. And you also have names like Electra Green Tech that came out with earnings just a short while ago, and they also surprised us with its earnings. On the weaker side, we have Granules India down 6%, United Spirits, wherein the margin performance was quite muted, as well as Vardhman Textiles, wherein the profitability eroded by as much as 76%. So all of those stocks down anywhere between 3 to 10%. And Zomato, of course, Aisha is in focus. That gold offer might be a positive news for users like you and me, but Credit Suisse is not convinced it's good news for the stock.
Clearly not. They're saying, in fact, that gold plan, which has been sort of reissued and renewed now after a hiatus of, I think, a year or so, they're saying that that might be a near-term negative, and negative it is surely turning out to be for the sentiment of the stock as well. An 8% slash, no less, for Zomato. In fact, I think it's now getting closer to what Ashwath Damodran said. The fair value
40.
for Zomato is, 40 once again. So, all that recovery that Zomato had from those 45 odd levels completely getting undone there, as is the case with the market as well. But Naresh Mirani too joins in on the show. Naresh, hi, afternoon. How worried are you about this breach of 18K today?
So I would not be worried or take a major view right now. A better view is taken post the event. We've seen this happen multiple times. We've gone to 17,800, 41,500, flipped back up, and this has been continuing for the last 3 weeks. And if we go back to the previous budgets also, back in 2021, we had a 4-day correction before the budget, and then we saw a single day of 4% uptick. We've seen a budget day bottom in 2016. So the best case right now is to wait for the event to get over and then see if the prices make a breakout or a breakdown move. So for now, I would stick to the view of sticking sectorally on the right places. So which is where PSEs, which I've been liking, looks interesting. IT, the small cap IT looks bottomed out. The banking space has been under pressure, but that is the one to watch out for after the event, because that is where a good correction has taken place. We are seeing a good retest of previous breakout points. So, but given that it is the sector which is taking the maximum brunt, that is one we'll see post event. But as of now, best trades are taken post the event, not for the next 3 days.
A little bit near term, but do you think this is just expiry day weakness and adjustment that we're seeing, or is this nervousness ahead of the budget next week? Daljit?
Yeah, good afternoon. Okay. So, yes, I think this is nervousness ahead of a big event. It's a combination of actually all the three things. Mainly, there is a big event lying there. And then for last 1.5 months, if you see, market has been in a very narrow range. And it has been quite indecisive, because we don't know what is going to happen globally. Most people are clear that, okay, Fed is probably behind now on increasing the rates. But what next? Will that be good for the market? Will that not be good for the market? So as of now, that the indecisiveness is creating this very narrow band, and markets were probably waiting for some kind of a trigger, which we have got today in terms of a news flow, and then we saw some sell-off. But most people were believing that probably it's only after the budget that we will see some kind of decisive move. From the budget itself, we are not very big. We are not keeping very big hopes. Just one or two things which are very important for the budget to address would be the rural stress, which everybody has recognized, which everyone has been talking. So is the budget doing anything towards that? And the second would be any tinkering on the long-term capital gains. So I think market will wait for these two very important aspects in the budget and then take a call on which direction to go. By that time, we will have some action from Fed also. 25 basis is given, but what is the next trajectory and what is the trajectory about recession? Rate hikes is now a thing of the past, but what is going to happen as a repercussion of that? Will that mean global growth going down? Everybody is cutting down their estimates. How much those estimates are cut and what is the actual impact of that? I think market would want to wait for that and see. So we'll see. There is a lot of indecisiveness, uncertainties right now, and that's what is not letting the market take any one direction.
When we were holding on to 17,900, it seemed we are out of the woods, but no, we have again slipped below that mark. So we'll need to continuously monitor what's happening at the index level. And of course, given the expiry, volatility is also coming into picture. The Adani group of stocks are also in focus. So Adani Ports as well as Ambuja Cement, ACC, the other Adani group of companies, transmission, power, etc. They're all reeling under pressure, though the company has issued a clarification talking about how the reports are perhaps malicious in intent and the company maintains the highest standard of corporate governance and all laws of the land have been followed by the company. But nonetheless, all of those stocks continue to reel under pressure. In fact, since we are talking about Adani group of stocks, let's pull up the price volume buzzer action as well. Ambuja Cement out of that definitely garners attention because it's been declining for fourth consecutive session. In fact, this is the biggest single day decline that we have seen in a lot of months, and it's formed a bearish pattern now. Mahindra CIE on the flip side has formed a bullish belt hold candlestick pattern. That stock is up around 7%. And it snapped the 3 black crow pattern, and that stock, a lot of our technical experts had been pointing out that has been on a good uptrend. SBI, that one is reeling under pressure today, so that heavyweight is down 3 to 4%, yes, and that's because it's formed a bearish pattern today. It's hit a 2-month intraday low and has been declining for 4th consecutive week as far as SBI is concerned. I'll come back to Naresh for a chart check on some of these, but Daljit, before that, the entire Adani group of companies, should one use this correction as a buying opportunity given the fact that the entire group has been quite a bit of wealth generator for investors?
Yes, it has been a good wealth generator for everybody. But I don't think this is the time to get into it as of now. First thing is the disclaimer. I am not holding any of these stocks, and we have not analyzed in detail any of these stocks. So there has been we have never covered all these stocks. So I have no detailed or deep understanding. What I can say is that because of the high leverage, we have always remained out of it, and that remains always the case, and that's a big red flag for us. Any company, not just this company, any company which has a huge debt on its balance sheet, we tend to avoid that. So with that view and bias approach, we are very clear that we are not touching even in this fall also. Now, how far these reports are true, what is the actual situation, that only over a period of time we'll come to know. But just because we are very clear that we are not touching something which is highly leveraged, so we will not touch even after this 5-10% fall.
Right. Naresh, just wondering, what is it that you're going to do with the Adani names, if at all you plan on trading them ahead of the FPO, that is on Friday, or maybe on the day of the FPO on Friday after the relentless sell-off in the stocks today?
So this is one stock which I've not been trading forever. The only stock in the Adani group I generally trade would be Adani Ports, and that is also taking a brunt today, given that it is where FIIs have allocation. Now, Adani as a group has a very low float in that case, so it's not the best trading stock for most of the technical guys. And as of now, it is more like a spatial situation trade which people are doing, wherein you can sell futures and buy in the FPO, but that is also a difficult trade. So the best thing to do in Adani is to avoid, because it's a difficult space. And mind you, the stocks have seen a larger corrections also before and sideways period. And as of now, given all the moves which have been very volatile, best is to avoid.
Moves on a lot of banking names today as well, and let me bring on board Vinay Rajani to help us understand. Vinay, HDFC Bank, ICICI Bank, SBI reeling under tremendous pressure today. Is this likely to continue in the near term, or is this a good buying opportunity?
Technically, if you were to go, the Bank Nifty has given a breakdown and it has been underperforming in today's session. Bank Nifty is down by almost 2.5%, while Nifty is down by 1.25%. So the leadership of the downside is coming from the banking, and after a long time, we have seen this kind of selling. And the Bank Nifty has broken below the low, which was formed in the early January. The 12th January low is broken, and the December low is also broken. So definitely there is a breakdown with a rising volume, and along with the PSU banks, private banks are also participating. So definitely, if market remains like this, Bank Nifty will continue to outperform. I don't think one should try to catch a falling knife right now. The breakdown is visible on the charts, and if Nifty were to close below 17,900, where we have seen put writing in the last couple of sessions, Nifty will also fall along with the Bank Nifty. But as of now, Bank Nifty looks weaker than Nifty. And looking at the chart, I don't see any sign of accumulation going on. Rather, one should avoid going long. And if this kind of close can give 1,000 points downside in the Bank Nifty also. So we need to see the close also, which is only 45 minutes left. But this kind of close is definitely giving me an indication that Bank Nifty is headed lower, and that lower downside could be 1,000 points also.
Put the spotlight on Zomato and what's happening with that particular counter. Yesterday, of course, there was that news flow regarding the 10-minute delivery being revamped, and today we have the gold offer coming back, and the brokerages don't seem to be taking it quite well as far as the stock price is concerned. Let's try and go across to Winnie and understand what does this really mean and how does it fare versus the competition. Winnie, take it away.
Absolutely. When you look at the loyalty program, now Credit Suisse actually came out with a note on this, and they mentioned that, in the near term, this Zomato Gold may be a bit of an issue and a concern coming in, a bit of a negative effect that we could see coming in for Zomato in the near term. But as of now, like you can see on your screens as well, what you're seeing in terms of the pricing, Zomato's rate is at 149 rupees for 3 months, while Swiggy also is much higher than that as well, or similar levels as well. So, that is a factor that comes into play as well, similar or higher levels in terms of the discounting factor that we're seeing coming into play as well. But what will be hurting in terms of a loyalty program is the pricing. The pricing discipline is a factor that is coming into play that will be affected, and that will hurt the pricing. Other than that, the possibility to hurt the profitability of the company, improve, which we're seeing that finally we're seeing some improvement coming in. So maybe this will be taking a step back. So that is a factor that a lot of brokerages are considering as well. While in terms of cannibalization, in terms of the volume, so eating up on bit on the terms of the revenue side as well. And yes, there are some positive factors like in terms of retention of consumers, while share gains is a strategy also that could be seen following in terms of volume growth as well. But as of now, Street is not taking it too well as well. So keep an eye out on Zomato.
Okay, that's the take coming in on Zomato. Right now what we're seeing is, yes, there's the TVS Motors, there's the Unilever, Hindalco, Maruti, Bajaj Auto, which are sort of now bouncing up, but still a lot of pressure from Buja, for ACC, for Adani Ports. There's Granules, of course, which hasn't resurrected after its numbers, and Indus Tower, which has collapsed about 7.5%.
Welcome back. 230 points down. As we have been highlighting, banks have been not doing that well. Teamlease, you can see the numbers at the bottom of your screen. Stock is down 2.5 to about 3% Daljit is with us, as well as our techies are with us. Daljit, but just let's start with this nervousness, this uncertainty ahead of budget, where we are seeing selling. You think it's much more than that we are talking about in terms of the selling that you're seeing in the last few days, or it's just uncertainty ahead of an event?
I think it is something more than that. Event is playing its own role, but all of us know now that the event's importance is much lesser now. So the main culprit, which my understanding is the earnings part. The numbers which have come in, we had expected that there will be improvement in at least 2-3 sectors like chemicals, like pharma, cement. There should be a good improvement in the margins because their inventories are getting used up and realizations are going up. Unfortunately, the numbers till now which have come, they have not shown that kind of thing. So which means that there is probably one more quarter delay in that. Maybe after quarter 4, we'll see some kind of improvement. So which further elongates your delay. Basically, you need to wait for some more time that numbers will come. As of now, nobody is changing FY24, 25 numbers, but margins are not coming. Then it means obviously there is a pressure on the overall earnings per share for the market, Nifty earnings as well as sectoral earnings also. So the 4-5 areas where there was a expectation of improvement in margin, that is not playing out. Second thing is the global recession, how this is going to impact. Now, every time we say that global recession, India is immune, India is decoupled, we don't have so much of worries of that. We are domestic and oriented, but we should keep in mind still 20% of our economy is dependent on globe. We still GDP ka 20% still goes into exports. So that means those
Daljit,
segments or
Daljit,
sub-segments are
right.
still in. Yeah.
Daljit, history has shown us that, in such scenarios, FMCG tends to do well, urban consumption tends to do well. This time around, names like Asian Paints, HUL are also finding it. Pharma, of course, is also finding it very difficult. So where does one hide?
Yes, so these are all sectors which have always been favorite and they are all very costly. So one more thing which has happened in this last few months we have seen is that this penchant for paying buy at any price, no, that is changing now because people were just willing to look at nothing else, only the quality. Since 2008, actually this phenomena has been playing out that you just have to play for quality, you have to pay anything, 60 multiple, 80 multiple, it's immaterial, just quality is there. I think that will also change now. That is started already changing because free money is now getting out of the way. Now when you are paying a substantial interest on the cost of funds, you will obviously look for what is the price that you are paying. So you will see this change also happening. So there is nothing wrong with these companies. These companies are doing well. 1 or 2 quarter blip might be there, but the problem is the valuation part. So where do we, there is no margin of safety as such, right? So that problem will probably aggravate further from here. People will look for areas where there is a valuation comfort, which unfortunately in our market as of now, there is no place where you will find a valuation comfort. Nothing is available less than 20-25 times of 1 year forward. Now, if your starting point is 20-25 times, you are expecting that it should deliver more than 25% growth in next 2 years to make something out of it. And if the scenario is such that future is not looking that bright, obviously you will not get that kind of returns. So return expectation has to mellow down. These valuations have to come down. Then only probably we'll see something.
Okay, so let's see. But you're talking about expectations and future growth, and today we'll get numbers from Bajaj Auto as well as Tata Motors. Let's go across to Shrishti to understand what was the read-through from Maruti and TVS, and now what should we expect from Tata Motors and Bajaj Auto. Shrishti, take it away.
Well, yes, firstly from the Maruti Suzuki, after a great set of numbers and outperformance coming in on all the fronts, we have already seen a spike on this particular counter post the numbers, and for today also this counter is holding in green. But when it comes to TVS Motors, results were after the market yesterday, and this time around a very strong management commentary coming in from the company. And not just that, when it comes to the numbers, it was an inline set of numbers, and once again we have seen the company sustaining that 10% of the margin front. When it comes to the commentary, they expect Q4 to be better than Q3 when it comes to their international business, because till now that has been one of the major pain points for the company. And going ahead, they are building on to the more hopes on the EV side of the business, because for Q4 they are targeting to double their volumes back then what was seen in Q3, which was around 29,000 of units. And all in all, they expect the demand sentiment continue holding in the next 12 to 18 months. They have more launches planned up onto the EV side, and the three-wheeler electric three-wheeler will be coming shortly. And on the back of great commentary from TVS Motors, the stock is holding up gains of 4.3% as of now. But coming to the upcoming results from the likes of Bajaj Auto as well as Tata Motors, for Bajaj Auto we are expecting the margins to be stable at 17% on a sequential basis. Definitely the volumes were a key drag, down 15% on a quarter-on-quarter basis. Here too the international business was impacted, so let's see how the management commentary pans out to be. But on to the number front, we are expecting a profit profit figure of 1,351 crores, and that will be a fall of 12% on a quarter-on-quarter basis. But when it comes to Tata Motors, Street is building on hopes to finally see a profit figure this time around. After 7 consecutive quarters in loss, we are expecting a profit figure of 285 crores. Let's see how the company plans out to be, and the major push will be coming in from the volume recovery, because JLR volumes were up by 5% on a sequential basis. The margins on all the segmental front is expected to perform better at 10.8%. What is our expectation on the consolidated front? Revenues are expected to expand by 4% at 82,738 crores, and EBITDA figure to be jumped by 45% is what we are building on for Tata Motors. So all eyes on Bajaj Auto as well as Tata Motors.
In terms of earnings, that's what essentially AutoPack is pointing out too. But Cipla numbers have just come out. We've got some more details in terms of numbers. We saw flashes at the bottom of your screen. So double-digit traction as far as core portfolio therapy is concerned. 11% YOY. This is ex the COVID growth or the COVID portfolio. US business 195 million. If I'm not wrong, the expectation was 187, which means about 6-7% higher than that number. And that explains why the margins are higher despite sales being lower. US is a slightly higher margin business. If we have the code plate of Umang Vohra ready as well, our Q3 FY23 performance reflects the sustained momentum in core One India and US business, driving our revenue growth of about 6% reported and about 11% ex on a COVID basis. He also talks about how they have achieved a quarterly run rate of 195 million, driven by contribution of various differentiated products across industries. Let's just pull up Adani Group stocks as well and move forward. You know, Ambuja, I think, has hit now a fresh low, if I'm not wrong. Okay, that's Adani Enterprise. Let's look at Ambuja, ACC. Ambuja, there you go. It's now had a fresh dip in terms of Adani Ports. I think that'll be another one which should probably come on your screen soon. It's now down 7 to 8. So, you know, Aisha, despite the clarification, these names continue to be lackluster.
Yeah, they do, but so is the overall market as well. A fair amount of nervousness ahead of the budget. You're in the thick of earnings. You're coming out of an extremely sort of overheated market if you were to look at the performance that emerging markets had, and the incessant sell-off by FIIs that you've seen year to date. I think we've already touched $2 billion almost, if I'm not mistaken.
Yeah,
almost
it was
there.
1.8 last week.
Yeah, so almost there in any case. And then you have a big event, a budget on, coming in next week. And unfortunate as it may be, you've got the Fed meet that evening. So, you know, our budget precedes that event. So a fair amount of nervousness, you know, headed in that way. And yeah, then you have that stark alpha generation by emerging markets. I mean, look at what a Hang Seng or the Shanghai Index or some of the other emerging markets have actually done in just the last 15 odd trading sessions. You'll be startled with the kind of returns that some of these indexes are giving you. So bound to be a composition of all these things playing out on our markets, because I don't think we can really isolate the Adani group of names. The overall market as well is weak. I mean, look at the market breadth. Only 13 F&O stocks are standing to the green right now, wherein barring a TVS Motors, which is seeing a 5% jump, rest all of them are about 1% to under 1% kind of gains.
Right, Ambuja is down, and look at the breadth, the way it is, as Aisha was pointing out, and that's really something which is bothering the bulls on the market. Nuresh, any view on Ambuja, ACC or Adani group of stocks?
So not really. The price action today is very sharp, and major support levels have been broken, at least on the cement side of it. And it's not just what has happened today with Ambuja Cements. We also saw Ultratech breakdown. So today's impact has a double impact in the form of Adani as well as what happened with Ultratech. Now the case is the last big breakout for the stock happened around that 400 to 430 mark. So I would expect that to hold on. We are still at 450, 60. So we are right in the middle of this range, broken down below 480, 490. Whether it goes to 430, 400 is a difficult call. But at these prices, it's neither a buy nor a sell. But closer to 400, 430, if it comes, that would be a place where one could actually be looking at for a buying position in Ambuja Cements.
That note, we're going to take a very quick break. Not seeing a material improvement in the market sentiment, but yes, we haven't worsened a lot from the session lows. But when we come back, we'll get you an interesting analysis on what the union budget has to entail in terms of what the macro setup is looking like and whether or not the centre is going to reach out for populism or will they then prioritize growth and stability. We'll analyze that after this very short break.
Welcome back. Well, the 3 p.m. move on account of expiry is underway and it's working out to be on the downside because we have slipped below the mark of 17,900, a cut of almost 240 points, Sensex down about 800 points, and the broader markets continue to reel under pressure, though the pressure point today really is the banking index, a cut of almost 1,100 points as far as Bank Nifty is concerned, 2.5% lower. So that's the drag point because all the constituents of Bank Nifty are trading in the red. But it's also perhaps because of the big event which is lined up for us, and that's the Union Budget 2023, just around the corner on February 1st. But just to understand how the macro context really is and what can the government actually deliver to propel it towards its $5 trillion economy mark, let's go across to Harsh to understand the macro setup. Harsh, take it away.
Well, yes, let's first talk about the fiscal deficit, right? That's, the first thing that comes to your mind when you speak about the budget. And the fiscal deficit over the last few years has started to really burgeon, especially on the back of COVID. This time around, it's expected to be around that 6.2% mark, still elevated, but coming off from those highs, 9% plus in FY21 on a lower base. But regardless, above 6.5%, now coming down towards that 6% mark. And on the back of that, let's also talk about divestment, right? Let's look at the divestment numbers over the last, 5 to 6 years as they come up on screen. We have seen that the divestment targets have been upped consistently year after year, except in the last year, which is FY22, where despite, keeping the divestment target quite elevated, it was nowhere close to being met, which is why largely the divestment target has come off. 175,000 was the divestment target back then, only 5% achieved, and currently, around a 78,000 crore rupee divestment target, of which around 40% has been achieved, largely on the back of LIC. Moving quickly on, though, we'll talk about where capex is concerned and how the capex trajectory has been. Capex has consistently gone up and is expected to go up. In fact, you look at it from FY15, Modi government has continued to invest in capex. Really, that is what is driving, or rather as a key driver for economic growth, and that is expected to be the case this year as well. Let's also talk about growth, right? That is going to hold the key. The key is going to be to push growth higher. 6.3% is where we are pegging FY23 growth largely. Around that 6 to 7%, 6.7% to 7% mark is what it's expected at. So need to try and obviously push that number a little bit higher, and hopefully the budget does that. And let's look at CPI, which is another key component of the manner in which consumption happens in the economy. And the CPI trajectory has been going upward. So there may be a couple of components in the budget to address CPI, including maybe the personal tax as well as capital gains tax.
Harsh, I'm going to take it up from there. That's the macro setup in which the budget is going to be announced, but it is definitely India's decade. That's the word coming in from KV Kamath, the former chief of the New Development Bank of BRICS. The veteran banker says that there are several pockets of high growth opportunities in the country, remains bullish about the prospects for the fintech space. Here's a sneak peek of the chat that we had with him.
Barring some external shocks which could be geopolitical in nature, or it really could be because of energy and high inflation, this decade belongs to India, and you're quite certain and confident about it?
Yeah, I am absolutely certain about it, Nikhil. And the test was the last 3 years. If we could not have managed ourselves during those last 3 years of enormous distress, could not have reset our minds, could not have pumped in technology into what we are doing, I think I would not have had the confidence to say this. But having done all those things, I can confidently say that the next 10 years are ours to win, and we will win those 10 years.
Okay, let's also welcome on board then Dipan Mehta and analyze what he's making of the market right now. Dipan, hi. Typically we wait for a pre-budget rally this time around. It clearly seems to be eluding us. Just 9 days to go for the budget, or 7 actually. And look at the crash in the market.
That's right. Still there are 7 days to go. And don't write off a pre-budget rally. These things 2-3 days before the budget, the market does tend to get excited all about new proposals which may come through and new spending targets which may come through. So there's still some time for a pre-budget rally, and it could play out. But right now, I think we are seeing the effect of a lot of profit booking based on the rally that's taken place in the last 2-3 trading sessions, and slightly somber mood globally as well. No specific large development per se, but it's just that market remains pretty much in that very narrow range, and there are no triggers for it to break down below or to scale past the resistance levels.
What will have to change for that pre-budget rally to happen in the next 7 days, given that we're already in a truncated week, tomorrow being a trading off, and then next week, midweek, we have the budget announcement? Because you've already seen $1.8 billion of FII selling coming in year to date. The markets are clearly not rejoicing good numbers, but punishing bad ones, clearly. And the market positioning doesn't seem to be indicating that there is scope for a very big move up. Fall, yes, if there is any taxation tampering which happens in the budget. Dipan? Okay, we seem to have snapped that audio with Dipan. Just going to get back to him. But yes, definitely feels nice hearing that he's pretty hopeful that we will see a pre-budget rally, and there's 7 days to go, so shouldn't shun off that opportunity just yet. But Vinay, expiry day, is the market positioning looking like that there could be scope for a pre-budget rally?
Is indicating a clear-cut breakdown, and looking at that, I don't get any indication that we should go long. So looking at the chart, I am a trend follower, and trend is showing downwards. So I think one should not anticipate the rally for the budget. We will definitely follow if market reverses, but as of now, it looks and closing on a weaker wicket. So I would remain shorter on the short side for the trades, and will take a call on the long side only if market reverses. So wait for a Friday session, and then we will take a view.
Adani Group of Stocks, that's the key focus area. Today, Adani Transmission has piled on more losses. It's down 9%. Ambuja Cement, ACC, Adani Gas, Adani Ports, many of those counters, they are down about 5 to 10% lower. But we talked about earlier the statement that was issued by the Adani Group. Now we have the Group CFO joining in to talk to us about the clarification regarding the recent reports. Listen in.
We are shocked that Heidelberg Research has published a report on January 24, 2023, without making any attempt to contact us or verify the factual metrics. The report is a malicious combination of selective misinformation, stale, baseless, and discredited allegations that have been tested and rejected by India's highest courts. The timing of the report's publication clearly betrays a brazen, malified intention to undermine Adani Group's reputation with the principal objective of damaging the upcoming follow-on public offering from Adani Enterprise, the biggest FPO by a private sector company in India. The investor community has always reposed faith in Adani Group on the basis of detailed analysis, disclosures, and reports published by financial experts and leading national and international credit rating agencies. Our informed and knowledgeable investors are not influenced by one-sided, motivated, and unsubstantiated reports with vested interests. Adani Group, which is India's leader in infrastructure and job creation, is a diverse portfolio of market-leading businesses managed by CEOs of the highest professional caliber, overseen by experts in various fields for several decades. The group has always been in compliance with all laws, regardless of jurisdiction, and maintains the highest standard of corporate governance.
That was, of course, clarification coming in from Adani Group. Deepan, any view on infrastructure in this correction? Even infra capex stocks have gone down. Anything that you like?
Yeah, I think that capex cycle certainly is reviving very well, and a lot of the engineering construction companies are sitting on multi-year order book, which provides a good degree of earning visibility. And this is one sector we'd like to be overweight in and could be a beneficiary of the budget as well as spending on infra is stepped up in the coming years or so, election around the corner being an important element over there. And with usual disclosure that we and our clients will be invested, we like Larsen & Toubro, India's largest engineering construction company, and I think that the prospects of the company are best ever I've seen in so many decades. And it's kind of a must-own stock in the portfolio. But again, the disclosure, as I said earlier, our views are prejudiced in the positive side because of our investment in the company. There are other smaller companies as well. ITD Cementation comes to mind, NCC, PSP projects. I think across the board, PNC Construction. If you look at all of these companies, the common thread is they are sitting on very good order book position, and some of them who have invested in HAM, those projects with hybrid annuity model projects, there's a good option for them to exit from those projects also. Now a lot of uncertainty surrounding those projects are over and done with. So very positive on the sector as a whole, and certainly would like to be overweight within that segment.
Separately, also wanted to watch out for Indus Towers, wherein the con call is underway and we are getting fresh commentary. Of course, the stock has been reeling under pressure since the start of the trading session, as the revenue was down 15%, EBITDA was down as much as 59%, and consequently, there was a loss at the bottom line of 700 crores, and that compares with 871 crore rupees profit that the company reported last quarter. And in terms of the fresh commentary, what we understand is that the company is saying they're evaluating at various options on how to recover the receivables from Vodafone Idea, because that was one worrying point. And secondly, they say that going forward there might be some provisioning related to Vodafone Idea that might be needed. They can't predict the quantum of the same, but nonetheless the stock comes under pressure. Dipan, what's your take regarding the entire telecom sector? Yesterday we got the news that Airtel has perhaps increased the prices of its prepaid tariffs in 7 to 9 circles. That got a stock on a tear, and now there is a bit of a news flow coming in and earnings coming in for Indus Towers as well.
See, Indus Towers is clearly a reflection of what's happening with Vodafone. And there was always hope that Vodafone would be well capitalized and they would get the money from the promoters, external investors, and the government would also convert part of their liability into equity. But none of these plans are playing out. And clearly, I think time is running out for Vodafone. And as a subscriber and an investor, I'd be extremely circumspect and almost border on worry at this point of time, because if Vodafone does go is not able to continue as a solvent enterprise, then it's going to have a very bad impact on Indus Towers, on the banking sector, and overall telecom sector, as well as India's reputation as well. So let's just keep our fingers crossed that they're able to get a lifeline over there. But a lot of uncertainty around this particular situation playing out. So would like to avoid Indus Towers. Within the telecom space, if you want to buy only a standalone telecom company, now the only one left for you is Bharti Airtel. And the sector, I think, as a whole is doing well. And with Bharti Airtel's move to cancel off or remove the minimum 99 rupee plan in most of the states, I think that would yield about 1 to 2% higher ARPUs for you. And management remains focused to increase their yields, which is very positive. And we are long-term positive on Bharti Airtel because we're gradually getting into a two-player situation, and some amount of pricing power will certainly come back. With 5G coming into play, there's a great deal of uncertainty as regards capital spend and an opportunity to increase the ARPUs.
Regarding the entire telecom sector, but let's get the BTSC ideas also out of the way. Vinay, let me first come to you. What's on your BTSC radar? Is it going to be STBT given the weakness in the market?
Yeah, so given the weakness of the market, I would go for the STBT. So Glenmark Pharma is looking weak, a clear-cut breakdown from the consolidation, and it has breached a crucial important support of 200 days moving average and has been underperformer. So I think Glenmark February future can be shorted with the stop loss of 414 and target could be 390 in the short term. So one can look at Glenmark Pharma for STBT. The another stock which I like for going short is the BHEL. BHEL has been outperforming till now, but for last 3-4 sessions, it has been underperforming and has breached the crucial support level. So I would go short on BHEL. So BHEL February future can be shorted around 77.50. Stop loss can be kept at 79.5 and downside target could be 74.5. So these two recommendations on the short side I would like to recommend.
Naresh, what about you? Is this BTSC for you, or you are also going with STBT?
So one buy, one sell. First is a buy on ONGC, which continues to hold on, is making a new high for the day even right now. So stop loss at 150 and a target price of 156. Second is a sell on India Cements. The whole cement pack looks the weakest as of now. Stop loss at 197 and a target price of 185.
Numbers on your screen. The PAT has come in at 278 crore rupees versus 416 in the previous quarter. I don't know if we have the ET Now estimates and whether or not this has managed to meet estimates. It seems to be the case, 2.5% lower for the stock price regardless, languishing with the rest of the market. 3711 crore rupees on the top line. And top line, of course, has been a little bit flattish. It's the PAT figure which has seen that bit of a dip on a sequential basis. I don't know if there is another income component here, which is why that massive hit on the PAT just yet. But for the series, we've managed a drop of 300 points. We've lost about 1.6% on the Nifty alone in the series, and we've seen a fall below the 100 DMA. We've traded largely in a broad band for about 500 odd points, and the broader indexes have managed to even underperform the Nifty in this series gone by. But Dipan, what I wanted to understand was what is giving you this kind of conviction that in the next 7 days there is still scope for a pre-budget rally? Because looking at the FRI selling quantum almost touching $2 billion and the market positioning this series, it doesn't quite seem to be the case.
No, I don't really have a very strong conviction. It's just that I've been around so long in the market, usually 2-3 days before the budget. Things tend to get quite exciting, and everybody's looking forward to some tax reliefs or some, kind of a relaxation from the government, and that typically does energize the market. But there's no real logic or conviction behind it. You could enter the budget on a very somber note, and that's also fine, because then whatever budget comes will be quite well received because expectations are low. But on the whole, the budget, mind you, is a bit of a non-event now, and it's more about the spending plans of the government. And typically, you may have a few trading sessions where the capital goods and infrastructure companies may do well. But beyond that, I think there's not much to be expected. Only thing is that a feel-good factor could get created if personal tax rates are tweaked and greater exemption limits are granted. And if on the capital market side, if nothing is done with the capital gains tax structure, then that will be very well received by the street.
What about the entire auto pack? The numbers, as far as the initial take is concerned from TVS and Maruti, have been quite strong. You are expecting similar story to play out for Bajaj and Tamo today? Dipan, the question is for you. Seems like we have hit a technical glitch with Dipan, but let me pose the question to Vinay as well. Vinay, the stock I wanted to bring to everyone's radar was Mahindra CIE. That's surging as much as 9% today, and even Sona, BLW Precision and TVS Motors, they're up anywhere between 5 to 7%. Anything on the charts that looks interesting?
Yeah, is this for me?
Yes, Vinay.
Yeah, so Mahindra CI has been the outperformer from the auto ancillary space and continues trading, hovering around its all-time high. The recent swing high was at 397, so that is the only resistance I see. But overall pattern is quite convincing, and if market doesn't go significantly lower from here, then I think this can continue to do well. So Mahindra CI is looking very strong on the chart, and today's low has become a strong base for the counter. So I think 347 is today's low, and yesterday's low was also 347. So that has become a strong support. So positional traders are advised to hold this particular stock with a stop loss of 347 and keep on trailing the stop loss, because market is uncertain as of now, and this stock is outperforming the market like anything. So trailing stop loss is the right strategy for this particular stock.
Vinay, I also just wanted to understand in terms of what's happening with TVS, any perspective you have on that? In a falling market, it's doing well. Of course, numbers were good. We saw EPS upgrades from even most of the bearish analysts, but what are charts telling you?
The chart is suggesting definitely a bullishness. It has crossed the previous swing high. TVS Motors previous swing was at 1020, currently trading at 1036. So with the volume, it is rising, but just because the results reaction or anticipation. So this particular sector has been giving some support to the Nifty as of now for last couple of sessions. But we never know, because choppiness is there in many stocks and many sectors, and we have seen that after giving breakout, stocks are going down also. So keeping a tight stop loss, one should continue to hold, but I don't recommend going long, because
technical glitch there we're facing today, not just Dipan, but Naresh, given how the series has been, I know a lot is dependent on what is announced in the budget come next week, but the fact that it's been a very broad 500 kind of range, having said that, we've managed to cling on to that support of 17,800 quite convincingly. What's it looking like for the next series?
So my view is the markets could surprise on the way up rather on the way down in a big way. Because what we have to look at is what has happened globally. So over the last 3 weeks, we've not seen any of the global parameters which are for a risk-off movement go off. You are seeing the dollar index from 115.16 has come down all the way to 101, 102 zones. It has not even seen a $1, 1 point uptick over the last 2-3 weeks. Then if you look at global indices, US markets continue to be stable. European markets are actually at a high for the last 1.5 years. Something like a United Kingdom index is at an all-time high. Emerging markets have also done really well. So global parameters have not weakened as of now. So the only time I become bearish in a big way is when there is a global meltdown, and that is not happening right now. So if there is no specific event in the budget which is detrimental to the domestic side of it, we could actually see a surprise, and we've seen that happen. So over the last few years, I remember a few budgets where major bottoms were made. The first time in 2016, when there was a rumor on LTCG, the LTCG did not come in. That was a bottom for the whole year. Then in 2021, we saw 4%, 5% uptick on the day of the budget. So, and overall, that is the case. So if we go negative into the budget, and if there is no surprise, there is so much of fear, we could actually surprise on the upside.
There's no surprise coming in, at least from the global markets, because the European markets are a tad bit mixed. In fact, the French CAC and German DAX are down about 0.25%. If you look at the pre-market rates coming in from the US, the Dow is down a good 140 points and the Nasdaq future is down 0.8%. And the weakness, it's expected that Microsoft, slide will continue later today as well. But Vinay, before we let you go, a quick check as far as BKG Foods is concerned, because that stock has suddenly spiked. The numbers are expected today, but ahead of that, there's a big spike there.
Yeah, so stock is trading at the highest level since its listing. So we don't have any much history on the basis of which we can comment on. But definitely, stock is trading above at the 10 days high and with a rising volume. So definitely, setup is convincing, and today's low should be kept as a stop loss, which is at 415.
For joining in, but that spike is definitely interesting as far as BKG Foods is concerned, 7 to 8% higher. But other than that, it's a truncated week tomorrow, so not much to really look forward to. But of course, it's Republic Day, so we'll wait by to get those visuals that we do from the... yes, so that will be interesting to track. But tomorrow, of course, there's no earnings. Thankfully, day after we have...
But the global markets would be on. So, yeah, while we're going to be on a trading
A lot of numbers will come out post-market,
Yes.
Dr. Reddy's.
Post-market, there is no market tomorrow.
Today.
Today, yes.
Post-market.
Today, post-market, yeah. So we'll analyze all of that, and needless to say, we will have coverage tomorrow. Bajaj Auto is out. 1351 is what we were anticipating. That's quite a big beat, actually. 1490 is what they've posted in terms of their PAT. While having said that, now Bajaj Auto, unfortunately, something I think the street is only going to react to on Friday. I don't know if you are seeing an immediate reaction to just the PAT performance or not. Pankaj, you have more numbers?
Yeah, just opening the release. So 1490.
So on a standalone basis, the actual revenue from operations has come in at what? 9,300 crores, if that's right, and 9,021 was last year's performance. I think it's a tad bit lower than expectation there.
Yeah, I have all the numbers with me. Revenue from operations in terms of the quarter has come in at 9,314 crores. EBITDA, that's the reported EBITDA, has come in at about 1,777 crores, was the highest ever, which surpassed the previous quarter. It's a margin expansion close to 19.1%. Domestic volumes saw sustained double-digit revenue growth across both two-wheelers and three-wheeler packed, and overall the numbers are looking, just decent, in line, but we'll get more details soon.
Yeah, 1.25% higher. That's how Bajaj Auto is shutting shop for the day. TVS Motors has been your star performer, but the rest of the market has not. All sectors, in fact, have closed in the red. Just 21 names are going home as winners within the F&O segment. That's how bad the breadth of the market has been. Ambuja, ACC, Adani Ports, Delta Corp, Indus Tower, they've really been smacked out of shape. SBI has fallen almost 5% intraday today. IndusInd Bank goes home with a 4.6% cut. Cipla 2.5% down. HDFC Bank 2.5% down. Axis, ICICI Bank. The selling has been quite relentless today. Reliance as well shaving off nearly 2% in trade. We're done for the day. We're going to see you with all the market action on Monday morning, or rather Friday morning at 8 a.m.